Okay, good morning, afternoon, or evening. So, welcome to Balance Day Adjustment Part C. I'm Miss Joanne, your Accounting and Finance Lecturer. Okay, so this is the last part. Phew, a relief, right? Okay, let's look at the Part C here. What we need to learn is what is depreciation and accumulated depreciation. Okay, depreciation happens to non-current assets. Okay, what happened is the cost of the fixed asset is allocated throughout the useful life of the fixed asset, and it will be recorded as an expense in the company's income statement. However, it's good to know that depreciation expense is a non-cash item. Why? Because when your car value goes down, do you pay any money to anyone? No, right? The only time you pay for the car is when you buy it, or if you took a loan when you are paying for the mortgage. Alright? However, the loss of value is not a cash item, but it is still considered an expense under Statement of Comprehensive Income Statement under SOCI. Alright, so when depreciation happens, normally it is calculated at balance day adjustment or at the end of the financial period. So what we do is we do double entry. We debit our depreciation account and we credit our accumulated depreciation account. Accumulated depreciation account is actually a minus non-current asset account. Why is it called a minus? Accumulated depreciation means all the depreciation or loss of value, all the loss of value of the non-current asset throughout the years are added up together. That's why it's called accumulated depreciation. Alright. So, because it's a minus asset account, it will be positive sign opposite of non-current asset will be on the credit. So, again, when depreciation happens or calculated at year end, we will debit depreciation and we will credit accumulated depreciation. Okay, so let's look at example on how we do balance day adjustment and how do we adjust our trial balance. Okay, there is two scenarios here. Scenario number 1, trial balance, motor vehicle 28,000, accumulated depreciation 2008. Additional information says here, motor vehicle depreciation is 20% using straight line method. Okay, I hope you guys still remember what is straight line method. Straight line method means percentage times cost. As simple as that. So in this case, we count our depreciation at year end. 20% times 28,000, we have 5,006. What do we do with 5,006 once we calculated it? So we can actually add it here. Why? Because we debit depreciation. We are not going to open the account. Alright? And we credit accumulated depreciation. So we add to it. So what happened is like this. When we add this to here, we must know exactly what we are doing. In depreciation or in SOCI, we will record the depreciation at 5,006 because depreciation happens every year. The loss of value of a non-current asset happens every year. So every year we record our depreciation as an expense in SOCI every year. Alright? However, the accumulated depreciation is minus asset. So this accumulated depreciation 2008 plus 5,006, the amount will be reflected in SOFP. Why is it so? Because SOFP record A equals L plus EQ. Alright. So minus A would be recorded under assets. Alright. Okay, so let's look at the next one. How do we calculate depreciation when it's reducing balance method? Remember, reducing balance method means the cost need to minus the accumulated depreciation before we times the percentage. In this case, the depreciation is lower at 5040. So what we do here is, again, we add it here. Okay, we add it here. And what does it mean would be, depreciation of motor vehicle for this particular trial balance will be 5040 recorded in SOCI as an expense. Alright. However, in SOFP, we'll have accumulated depreciation of motor vehicle 2008 plus 5040. And that's how you adjust your trial balance every time there's a balance day adjustment. And if you have noticed from Part A to Part C, balance days adjustment is always additional information. If you always see this, you have to count, update. And that's what you do. In the test, in the exam, in the exercises, in your textbook, that's how you do it. Alright, now we almost reached to the last part. That is sales or disposal of non-current asset. Sales of disposal of non-current asset is when we actually sell our non-current asset. When we sell our non-current asset, we need to find the gain or loss on sales of non-current assets. Alright, so let's look at this trial balance. We have motor vehicle 112. We have accumulated depreciation 23,200. Okay, additional information. On 30th June, a motor vehicle cost 20,000 is sold by 15,008 by check. The book value of the motor vehicle is sold is at 12,000. So what does it mean here? There's so many things here. Okay, when we say something is being sold, we must actually look at the date. Is it sold at the end of the year? Yes. So if it sells end of the year, do we need to count the depreciation for that year? Yes, we do. Okay, so there are some jargons here you must know. Book value, what does it mean? Book value means cost minus accumulated depreciation is the book value. Means at this present point of time, how much is the value of the motor vehicle? Alright? So the book value is at 12,000, but they sell at 15,008. What does it mean? The value of the motor vehicle is 12,000, but the business able to sell it 3,008. So what we do is we count. How much do we gain here? The sales value is more than the book value. In this case, it's a gain of 3,008. Once you count that, you actually record it here underneath the trial balance and put 3,008 in the credit sign because 3,008 as a gain is other income. Alright. And then the next thing, depreciation of motor vehicle at 10,000 using the straight line method. So we still need to count the depreciation. So the depreciation will be 10% times the total value. Why is it the total value? Because the 20,000 is actually sold at the end of the year. So it's 11,200. Alright. So bear in mind, it's very important not to update the minus 20,000 first, because if we minus the 20,000, it means that the 20,000 motor vehicle is sold beginning of the year, which is so wrong. Alright, so once you do this, then only you minus the 20,000 here. Alright, because you have done it earlier, you could have make it wrong. Why? Under motor vehicle, at the end, you only left of cost of 112 minus 20,000. Alright, so that's all for part C, and that's the whole thing for balance day adjustment. I hope you have fun listening to the video, and I hope you gain some knowledge in listening to the video. I see you in the class, and we would do some balance day adjustment in the trial balance according to the book when you look at the pre-class thing that you need to do. So I look forward to seeing you. I look forward to you applying of what you understand from the video. Alright, see you in class.